Welcome, everybody, to our session on financing the future, strengthening MSMEs against climate shocks in emerging markets. I'm very excited to be here, and particularly for the lineup of panelists that we have in this conversation. I'm sure that the next 45 minutes are going to go out flying. So really, what we'll have today here, we'll hear two different perspectives on what does financing the future for MSMEs means. On one side, we have a corporate foundation like Shell Foundation working towards raising income while lowering emission and playing this catalytic role in financing, fostering partnerships, and fostering innovations in the ecosystems. And on the other end, we have two startups who are building solutions on the ground in Africa and in Latin America, providing the most needed financing for MSMEs. So before open it up and giving the word to our panelists that we have here, I just want to briefly set the stage on why are we talking about this? Why does financing MSMEs against climate shocks? So I think it's well known to everybody that micro, small, and medium-sized enterprises constitute a great deal towards economic development. According to data from the World Economic Forum, they constitute around 90% of business globally, and they are critical access to goods and services in emerging markets. They contribute between 60 and 70% of employment, providing jobs and incomes for millions of households around the world. They also contribute around to 50% of global GDP, and they play a critical role in economic growth and sustainable development. But MSMEs face so many challenges, including limited access to financing, low productivity, and limited market access, which hinders their growth. And if that wasn't enough, they are now facing the very specific challenge to one of the greatest threats of our time, climate change. At Mercy Corps Ventures, we have been doing research on how micro, small, and medium enterprises have been affected by climate change. And what we found is that on average, 40% of these MSMEs say that they have unmet needs, and 90% of MSMEs have reported weather-related impact businesses, weather-related impact businesses. And mainly these weather-related relate to either droughts or flooding. And they really, even if they don't understand what climate change means, they do understand that there's a lot of changes happening with the weather, and particularly droughts and floods, and that they are affecting how they do businesses. So to talk about these topics and how is it that we can really build the finance for the future, we have today Jonathan Berman, the CEO of Shell Foundation, which guides the foundation strategy and delivery. And above that, he also serves as the board of multiple organizations, including Factor E, Asoko Insight, and other transformative organizations. And before joining the Shell Foundation, he also was a managing partner at a private investment partnership focusing on emerging markets. And so he has a lot of insights and knowledge on working on emerging markets. We have Alejandro McCormack, who is the co-founder of Abaco, a startup providing financing to SMEs in El Salvador. And we have Dami Olawoye, who is the CEO of PayHippo, a startup providing financing for clean energy access. But I will have them better explain what they do in a minute. So really, Jonathan, I want to open up with you and for you to describe us a bit more what's Shell's foundation objective and strategy. I love your very simple objective, raising incomes while lowering emission. What does that mean? How are you doing that? How are you making sure we're able to raise these incomes while lowering emissions?
Yeah, well, thank you, Natalie, and thank you to Axion for sponsoring the discussion. I'm delighted to be here, both as a guest and as a partner with Axion. So the Shell Foundation has been around for 24 years. We're about to do our silver anniversary. And throughout that time, it's been focused on various aspects of enterprise solutions to poverty. Now that's so common now. It's like the air we breathe. Lots of people think about enterprise as a pathway out of poverty, but at the time that the foundation started, that was a pretty rare way of thinking. In the last couple years, Natalie, you're right. We focused on this particular challenge of which you mentioned, of a triangle of which you mentioned two sides. So it's how do you raise incomes while lowering emissions on a commercially sustainable basis, right? Why on a commercially sustainable basis? Because it's going to take something like $350 billion to enable all the people who can actually raise it, all the low income people with low living income to achieve a living income with clean energy. That's going to require something like $350 billion, which is far more than exists is going to be applied to them from public assistance. But that money is more than available in the private markets. There's some $7 trillion of private capital currently allocated to emerging markets that now is obligated to a net zero target as of like 2 years ago. So, when you think about $350 billion, it seems like a lot. When it's part of 7 trillion, it seems like, something that might be attainable. So that's why it's important that it be on a commercial basis. Yeah. And to help people achieve this outcome of raising incomes while lowering emissions on a commercial basis, we focus on three things. We foster earliest stage enterprises to do that because there's not enough solutions that actually achieve all those three things. We scale the best of those solutions with partners that reach millions of low-income people. So, some of the world's largest agribusinesses are our partners. Some of the world's largest transporting companies are our partners. Some of the companies that reach the most retailers in the world are our customers, are our partners, so that we can reach millions of people with really good innovations. And the third thing we do is catalyze financing for the other two activities. So, can we tap some of that institutional capital and lure it into the markets that we're seeking to work in to help the customers we're seeking to help? We're generally living at something between, let's say, 40 and 70% of a living wage. Those customers are entirely commercial. That's partly why we call them customers. They are viable participants in a just marketplace, but it often takes a little bit of work and some concessional capital to lure global capital into taking the risk with those customers. And so we seek to help out with that. Let me pause there, except to say that you might think that what you ought to be doing is fostering the early stage. Do those sequentially, right? Foster the early innovations, get those right, then scale them, right? And then you'll go and find the financing for them. And you might do that if you had unlimited time. But if you believe that there's urgency to the climate crisis, and you believe there's urgency to the income inequity crisis, and I believe both those things, then you have to find ways to do things faster and do them in parallel. And that's why we work on all three at the same time.
No, Jonathan, and I agree with you, particularly at this last point that you were, well, I agree with everything you mentioned, but particularly the last point when you were saying like the urgency, like we do really need to test, finance, and scale these solutions all at the same time and take those risks in fostering those innovations. And that's also what we do at Mercy Corps Ventures at a different scale, of course, than Shell Foundations, but we're really like embedded in investing and supporting these innovations that provide climate adaptations and resilient solutions for underserved populations in emerging markets. And yeah, excited to share a bit more about these solutions and how an organization as Shell Foundation can help them scale and thrive. So to move the needle now to some of the innovations that we're seeing in the market, Alejandro, I would love for you to share what is it that you're doing in El Salvador to foster financing for small and medium-sized enterprises.
Thanks a million, Natalie. Great to be part of this panel. Super interesting people to be conversing about it. An issue that is very close to my heart. So I'm the founder of Abaco. Abaco is a platform that we started about 14 months ago to tackle what we view as the largest problem in Latin America, or one of them, which is the $1 trillion micro and SME credit gap. As you guys may well know, lending to SMEs is really difficult. There's a lack of data and they don't have collateral. There's a lack of formalization. And so we had to be very creative. We came up with a digital platform where we thought about the business model from kind of the ground up. We identified what is the most valuable element of an SME's balance sheet. And it's not their physical assets. They don't have large real estate holdings. What they do have, however, is accounts receivable. They have commercial relationships with their clients. And so how could we help these MSMEs advance these receivables and thus pursue one of two things? We identified early on that typically our customers use us for one of two things. One is to pursue an opportunity to grow their business, or the second is because, as we say in Spanish, se le trabaron las carretas. And to translate that roughly, it's the cart got a bit stuck. And so this is where resilience really comes in, right? Where you have a small business, you have a small business owner, and there's a situation, an adversity that you were not expecting. And so how do you anticipate for that? How do you plan for that? You can't really. But where it is very useful is to have tools that allow you to respond adequately. And so we developed this platform that allows them to quickly advance cash based on their commercial relationships, based on sales that they're waiting to be paid for, and thus give them that strength to grow their businesses quicker.
So basically providing the finance to help grow the business quicker. And Dami, you're the last one to show your innovation, but I love because what PayHippo is doing basically ties everything together. So please share us a bit more about the type of financing that you're providing in Nigeria for MSMEs.
Yeah, thanks for having me here, Natalie. So in most African countries, what we see is that access to finance is the biggest blocker to clean energy transition. So at PayHippo, what we do is we provide seamless financing to enable the purchase of clean tech equipment. And we do this at different stages of the distribution chain, right? So we provide asset finance to end users to enable them buy clean tech equipment and spread the costs out over a period of time. We also provide inventory finance to installers, distributors, and asset operators. And this basically enables them to buy equipment in bulk. We initially started off providing unsecured working capital loans. And it was in doing that that we spotted that the biggest challenge that most small businesses in Nigeria face is, around access to electricity, right? Solar, for example, just sounded like a no-brainer in terms of a solution, but the challenge that they faced with getting, with basically switching to solar was that upfront cost. So it was in solving that problem for small businesses that we began our journey, into climate finance. That's effectively what we do now.
So basically, you just closed there with my next question, and you call yourself as climate finance, that you're providing climate finance because you're helping these SMEs to access equipment that enables them to get solar energy. So this generates an impact on both terms, on one, having reliable sources of energy, and two, being able to have the proper finance for that type of products. But yeah, Dami, can you explain a bit further in your words and in the work that PayHippo is doing? How do you see your work contributing against climate resilience for these MSMEs?
Yeah. So as you rightly pointed out, right, as you were speaking, two of the shocks that a lot of MSMEs in Africa, currently face are from flooding and droughts, right? And what we find is that a kind of byproduct of those flooding and droughts are, one, less access to energy, and then two, accelerated inflation, right? And with our financing, it actually to a degree solves those two problems. If an MSME, can get access to a solar system, in periods after you have flooding, they can get back to business a lot quicker, right, than if they didn't have it. So it enables them, get back to generating income. And then secondly, from a kind of business perspective, right, the cost of doing business is going up, right? There is inflation, and all these small businesses are trying to find innovative ways to cut costs. Switching to clean energy now is actually a cost-saving mechanism. And the reason for this, right, is because petrol costs, diesel costs are skyrocketing. So it's becoming even more and more expensive for these businesses to operate. If they can switch to a solar system using our financing, their monthly payments in most cases are actually lower than what they would have spent, buying petrol or diesel to operate. So it actually helps these businesses get to profitability, or to operate in a profitable manner. So yeah, that's what we are currently seeing.
So basically helping business to continue to operate as normal and lowering the cost of the energy while lowering emissions.
Exactly.
I'll bring it back to you, Jonathan, also. But Alejandro, I'm curious on your perspective. And Mercy Corps Ventures have been investing in what we call financial inclusion or fintech and so forth for a while. And when we're always it seems, of course, very intuitive that in order to have climate resilience, you first need to have financial resilience, because if you don't have savings, if you don't have access to credits, if you don't have a way of coping with shocks, of course, when these devastating climate effects come, it hits us even harder. But sometimes it's hard to see that link on how does providing liquidity financing to SMSMEs can really help to build that resilience and where it's that connection to climate. I know Abaco, it's in very early stage and still trying a lot of things out, but yeah, curious to hear a bit more your thinking and your hypothesis on why providing the appropriate financing for MSMEs does help to build this resilience overall and specific climate resilience.
No, absolutely. I mean, I wish it was as clear cut as Damia. I loved hearing his story as an entrepreneur. I empathize a lot. You end up having to shift the business model a few times because you realize there might be a bigger opportunity over here. There might be an opportunity for greater impact over there. In our case, in Abaco's journey, we kind of stumbled into climate resilience. We started the company in July. We launched in July of 2023. And here in Central America, right at that time, there was a lot of flooding. And we were trying to validate the business model, right? That advancing accounts receivable is an interesting way to finance SMEs with lower risk. And we ended up in a niche which we didn't expect. We thought, a lot of our demand was going to come from services providers. And in the end, all our initial cohort of clients were farmers, smallholder farmers, because they had to suffer this adverse climate-related shock, right? They were dealing with these unusual amount of rain and a lot of flooding in the region. And they were waiting on invoices here. Just to give a bit of context, in Central America, net payment terms, so the amount of time it takes a corporate to pay a SME supplier, can vary between 30 days, 60 days, sometimes up to 120 days, especially in the export sector. And so these farmers who are selling to exporters, they're currently dealing with a lot of mess, right? Their farms are being flooded. Their team is having a tough time getting to the farms where they work. And so they're having to take out of pocket a lot of additional costs, while they're waiting for their customer, these corporate exporters, to pay them for 120 days. And so there's this big disconnect, this big mismatch in terms of cash flow for these SMEs. And so that's actually how we dived into the topic of climate resilience. I'd love to say that it was super conscious, but a lot of times as an entrepreneur, the journey is part conviction, part accident and luck. And so we were really lucky to end up in this segment that is deriving a lot of value from our solution, because exporters in El Salvador, Central America, these are very export-oriented economies. Exporters tend to have a similar mismatch in terms of their cash flows. They're waiting until their goods get unloaded in a dock in the United States, and until they arrive at Walmart or whatever the end customer is, they're not getting paid. And what do? Is they squeeze their supplier. In order, they're like, I'm not going to suffer this cash flow mismatch. I'm going to squeeze my supplier, so I'm getting paid in 120 days, so you guys get paid in 120 days. And so we kind of slotted in between there and tried to resolve that problem for both parties, because a corporate is only as solid as its supply chain, right? If you have problems with your supply chain, you're going to have problems going forward. And how this all ties into climate resilience is that we saw that these customers, these recurring customers, were using us specifically at a time when they really needed us. Right now, we're having record harvests in El Salvador, especially in the coffee industry. And so there isn't so much demand from a climate shock perspective, but rather from a, how do I pursue this opportunity? There is currently way more crop than we expected. And so how do we hire more people on the farm? How do we advance certain invoices so that we have more working capital in order to grow our businesses and take advantage of this unique opportunity? And so we're kind of on both sides, right? When there's an opportunity to be pursued, and also when there's an adverse shock, specifically increasingly related to climate these days.
That's awesome. I love how these two solutions, like even if you're working with both MSMEs and providing finance, they are so different. And Jonathan, yeah, I'm curious with Shell Foundation, like how do you see the role of MSMEs in helping with raising incomes while lowering emissions on a commercial basis, and then these type of solutions? And if you have any other types of solutions that you want to share with us, or a bit more, like also again, like tying the links of what we're seeing with these two specific solutions.
Yeah. So, first I would comment on something that Alejandro said, that his journey into sort of accidentally backing into climate is one that I hear all the time around in the financial inclusion community, right? I feel like I've heard that from a number of smaller startups like Alejandro's and Dami's, but also large organizations like TechnoServe and Axion, and even our own, right? We didn't start in the climate space, but each of these organizations in one way or another has described how they were going about their financial inclusion work and found that there was no way to continue doing that without addressing climate issues. So I think that's actually a pretty common trajectory. And to me, it's a pretty honest one, because you're still focused, to me, that you're still very focused on that customer, on that individual who you're helping to grow. It's not, that to me is where you have to start if you're going to be relevant to that person, right? If you just come down from the north, God forbid, and say, we want you to cut your emissions for the sake of the planet, that just is not going to go very far in most of the parts of the world where the four of us are working. So starting with the needs of that MSME, and recognizing that means addressing climate, is, I think, a very honest way to come by it. Yeah. As for the role that MSMEs play in that resilience, I'll cite two things out of our recent experience. One is they're closest to the customer. The number of initiatives that are launched from a big, a global foundation like ours that then are maladjusted for the local context, or for a person experiencing poverty in that context, is overwhelming. The world is littered with interesting ideas that came either out of New York or DC or Palo Alto that just died on the vine when they got into emerging markets. That's because they're not close to the people involved. Our hypothesis is the people who were not involved may not have been close enough to the customer. We feel we're at risk of that. MSMEs are a pathway out of that, because they are always close to that customer. They're close to the lived experience of the environment around them. They just don't get that wrong, right? The second is that we've quite, even just this year, found that where we might have thought a large corporation is the pathway to scale, we've found that, in fact, it is smaller enterprises, SMEs, but also even down to SMEs, are in fact the only way to access the market. So recently, the head of our farmer portfolio came to me and said, listen, in Nigeria, we've been looking at various ways to work with very large corporates that we work with to serve millions of Nigerians, to help them raise incomes while lowering emissions on a commercial basis. I bet Dami's going to be familiar with this story. But we find that they're either not that invested in that, or not sufficiently for the long haul, or not when there's extensive currency risk, as there certainly is in Nigeria. But who is available for that work are SMEs. And if you can build a relationship with a network of SMEs, say through a bank, through a bank that serves them, which is what we're working with, then you can reach scale and penetration with those entities. And we know, and you can't, in a way that you can't reach it through any other sort of more platform play. And we feel like we know that because we've tried it.
Yeah, I'm going to follow up with the next question that you were just saying right there, to like being very close to the customers and developing the right solutions right for them. But yeah, I just wanted to follow up, as I think we were all talking before, like it's really like, I think there are two types of climate solutions that we talk about. So one, it's like the very direct climate solutions. We have companies in our portfolio that do wild forest predictions, or they do weather predictions to make sure that people know when's a drought coming or when's a flood coming. But then you have the other types of solutions, as both Alejandro and Jonathan were saying, that like maybe they're not climate first, but if you indeed do not embed that climate lens or that climate analysis, like climate change is happening. So we do need to have that in the back burner to understand how are we serving those customers that are being impacted by climate change, and how we as a business adapt to climate change. So yeah, just throwing that out, because internally we've also developed what we call our climate adaptation and resilience frameworks, which helps us through this thought process of understanding different solutions and what's the connection to the climate adaptation. So yeah, loving everything that you're throwing out. And yeah, I want to bring it back to Dami and Alejandro, and before picking up a couple of questions on the chat, I think you've all touched on that you've been building the right products for these small and medium-sized enterprises, or micro and small and medium-sized enterprises. So how do you build the right products for them? Like, how do you develop products that they do want to use, solve for their needs, are appropriate for their challenge, and they're able to pay, and that allow you to make a profit so that you can grow on a commercial basis? And Dami or Ale, whoever wants to take that one first.
So I think it's a great question. I think it's a question all entrepreneurs and I guess investors also have to think about. I think one of the things Jonathan mentioned is super relevant is, how can you be close to the customer, right? And I think in today's day and age, when you're talking about financial services or when you're talking about digital solutions, you have this opportunity to be so much closer to your end customer or to the client that really needs your service, much more than in any other age ever before, right? We have a much higher mobile penetration than ever before, at least here speaking for Central America. And you have increasingly a bit more knowledge around digital solutions, especially related to finance. There's starting to be a bit of knowledge around this stuff. And so this means that we're able to get to, and this is one of the things we think about a lot is, okay, how can we get closer to that client? And I think that that's really where a lot of our product focus is, And one of the things we realized when we first started, and I'm trying to tie it back to climate resilience, and we were dealing with all these farmers, which was not in our business plan, to be totally honest. We didn't expect that these were going to be our clients. And we noticed they were coming down to the office to meet us and to understand the solution a bit better, because we were still doing all this product discovery. And we'd see that there was literally dirt under their nails, right? So these are people that are working with their hands. And the fact that, and we'd ask them, okay, where have you come from? And they were coming from kind of far out, interior of the country. And so we said, okay, wait a minute, here it's super key that you shouldn't have to drive 3 hours to meet with us and then 3 hours back. And that's probably how they're currently dealing with their financing needs, right? They're having to drive 3 hours to some kind of banking institution, sit down there, wait to find out, 2 or 3 weeks if they're going to receive a loan, at what price, and under what terms. And so that's where we thought, okay, well, we need to figure out a way to do this completely digitally. These and where and what is a correct digital solution for this type of customer? Because an app or a web app, these aren't things that our type of customer that's dealing in agricultural services is used to using. They don't like downloading apps on their phone. That's valuable data or screen real estate that they're reserving for other kind of stuff. And so we want to meet them where they are. WhatsApp, we think of WhatsApp as like the operating system of LATAM, and I truly think that any digital financial solution or any kind of tech solution will have to migrate in one way or another to WhatsApp if they want to truly be meaningful at the base of the pyramid. And so that's where a lot of our focus is right now, finding the customer where they already are, not trying to force them. I think Jonathan said it really well, is, coming up from the north and saying, oh, I've done fintech stuff in Europe. This is how it should be. No, because here it's completely different. We say let's tropicalizar it. Let's tropicalize it to the local environment. And so finding our customers where they truly already are. What are these communities where they already are? Be they digital or be they physical, and meeting them there. I think that's super important, as well as educating them along that journey.
Finding them where you are, and I love what you're saying, like not pushing additional solutions, but using what they're already using, like building stuff on WhatsApp. That's great. Like, yeah, Dami, can you share a bit more, like how were you able to listen to your customers to pivot from traditional financing to clean energy financing? Like, yeah, how did that happen, and how do you continue to listen to your customers to make sure you build the right solutions?
Yeah, so I mean, our pivots and our journey through climate finance has directly been a result of listening to customers. At the beginning of our pivot, right, when we started our asset finance product, that was in response to feedback we were getting from small businesses who struggled with electricity, right, both from a cost and a reliability perspective. So we started thinking, okay, how can we help them solve this problem? Because at that point, that was the biggest problem they faced with operating. So we thought, okay, switching to solar is probably the best solution. But the blocker that they faced with switching to solar was that upfront cost, because solar kits, can be expensive. So that was what gave birth to our asset finance product, right? And when we started it, we didn't have the full product. We just knew that there was a problem here that needed to be solved. And we started testing with a few loans, and it's basically got refined to what we have today. Same thing with our inventory finance product, right? When we started with the asset finance, we were working a lot with solar installation companies, right? They were the ones that were actually ended up referring customers to us. But what we found from working with these solar installation companies is that they were operating in a very inefficient manner. They were literally buying equipment in piecemeal. So an order comes in, they take the funds, and then they go and they buy the product. That's an inefficient way to operate. You're not buying in bulk, so you can't get bulk discounts. And as Jonathan pointed out, right, there's a currency fluctuation problem. So you could take funds from a customer, but by the time you get to the supplier, the dollar naira rate has moved, so it's now more expensive, and then you now have to go back to the customer and say, oh, you need to pay more. So that inventory finance solution that we built was a direct response to the problems that we saw solar installers and solar dealers facing. And there's a third solution that we're building at the moment. It's which is a response to another problem that we're seeing, right? Which is basically around the voluntary carbon markets. Inflows from voluntary carbon markets, right? So carbon certificates, carbon credits, renewable energy certificates, and all that can ultimately make the cost of the equipment cheaper for the borrower. But what we're seeing in most African countries is that most of the clean tech assets are currently excluded from these voluntary carbon markets. So we're building solutions to solve that. But again, that's in response to an actual problem that we are seeing and we hear the customers speaking about.
Yeah, and I love your case, Dami, just because, like, yeah, as you mentioned, like you started with one product, and then by listening and hearing to your customers, you were able to develop another product, and now you're developing a full suite of solutions. And yeah, Jonathan, curious on your perspective on the enterprises and supports that you provide. Like, how do you see that? How do you see that being close to the customers and making sure that the original idea that you started, like, pivots and what we say always to entrepreneur, like married to the problem and not to the solution, so that you're able to continue to pivot and provide that specific solution to a specific problem. Yeah, curious and what you're seeing that you could share with us.
Well, I'll speak to that. I'll speak to that last question from a foundation perspective. How does the foundation stay close to the problem and not to the solution? That was hard for us, right? Because we had backed for decades specific solutions, sometimes individual solutions for decades, and as they became not so relevant to the customer or moved away from the customer, frankly, we sometimes tracked with them and not with the customer, to the detriment of our overall impact. So we made a very conscious pivot as a foundation to be customer led, where we're actually organized by customer. We have 3 customers we focus on: a farmer, a transporter of goods and services, and a micro entrepreneur, usually a small retailer. And everything, we're organized that way around those 3 portfolios. And most every conversation in the foundation begins or ends with, what is this doing for a farmer, a micro entrepreneur, a transporter? So there's a cultural mindset within the organization that's to go on. But then you also have to be brave enough to abandon solutions, and sometimes abandon companies, in favor of the problem, right? I mean, you should do that responsibly with a graduation plan that allows for that. But whether it's in partnership with a global corporation or a small enterprise on the ground, we have to have the courage to be able to say that, to say this is what optimizes for that end user. So let's move towards that. So that's been a journey for us as a foundation. I think I would say a little bit in regard to the markets in which we operate. I mentioned that we look to catalyze global capital for those customers, and indeed even for companies like Alejandro's and Dami's. And a challenge we face there, going from that customer, let's say, in the streets of Nairobi or Lagos, up to the asset manager that's sitting in New York. I sat with like $12 trillion in assets under management during Climate Week. That's a bit of a journey, right? And you have to have a translation function for them, because when you have that much capital, you can only think big. I found it, I sat in a room, as I say, with that much capital in hand, and the managers of the capital could think only about very, very large solutions. But when it came around to our moment to talk with them a bit, we said, listen, sometimes the solution, if you're going to reach these markets, sometimes the solution can't be that big. If you're serving an individual, I'll take an example, an individual I shared there, a fishmonger serving in the streets of Nairobi, selling fish portions to other smaller micro retailers, right? That person is best enabled by power that comes from distributed energy, a rooftop solar panel that powers a small fridge, right? She is not best served by the big infrastructure even where it is available in the urban center. Sometimes the solution is no energy whatsoever, right? There's a product that we recently supported in a prize that they won the prize, that's called a green pod. That is a small sachet, looks like a tea bag, right? A small sachet of enzymes that can keep 20 pounds of fruit 40 days longer on the shelf, extended shelf life by 40 days for 5 cents. No energy required at all, right? Those just aren't solutions you're going to get from, the world's largest corporations and the world's largest asset managers. You have to be working closer to the ground, and typically with entities like Alejandro's and Dami's, and then the MSMEs that they're serving.
Love the 2 points that you touch. First, thank you for being open and sharing how, as a very large corporate foundation, you also go through these pivots and analysis internally of what is it that you're doing or not doing. I think we also sometimes think that's something entirely to entrepreneurs and to early stage startups, but I think we all know that the organizations that don't do that are destined to probably not live longer because they are not considering what's changing. So as we're also have gone through many of those changes internally, love it. And the other point that you were mentioning of the big global markets and the local solutions, and I think you're spot on. We need both. We do need the massive and macroeconomic changes and big projects that can really achieve, but we also need those smaller solutions that are targeted at the farmer, at the micro enterprises, at the woman, I don't know how you say that, and the woman who fishes and sells her produce and all that. So that's really great. I'm going to take up a couple of questions from the audience. I think the first one, we already took a bit, but we've talked about the challenges of providing financing for MSMEs because they're informal, they don't have collateral and so forth. So maybe Alejandro, to you, how have you been able to solve that challenge and provide products that are right fitted for them, but that also you make sure that they pay back to you and it's a good product that you can make a profit with?
Yeah, that's the magic or the trick in lending, right? I think that there's a big, there's just this reality, that we'd love to lend to everyone, but then we would be a charity, not a business. And so finding that sweet spot where we're maximizing impact and understanding where do we work best. I think that, if I read that question that was made by Adisu, I think that for me, maybe the key element is where does the traditional financial institution step in? And I think that that's a really important thing when we think of the journey of financial inclusion. You cannot just depend on us, on these little fintechs. I hope that PayHippo, Abaco will achieve that giant scale, and there are some fintechs that are managing to get to a certain scale. But I think always super important in that journey is that access to larger chunks of capital, which I think Jonathan also touched on. You're going to it, and we've had to be very honest with ourselves as a company that at some point we will graduate our customer out of Abaco, and that's not a bad thing. That means that we did our job well. We educated them, we grew them, and then at some point they should move on to a more established financial institution, someone with a bit more scale, someone who can handle a larger loan volume for that SME. And so that's for me, I think, where there's really got to be pressure from all the integrants of these ecosystems on traditional financial institutions to really view fintech not as a competitor, but rather as a great collaborator, as a source for potentially validated leads, because if one of the difficult things and one of the reasons why a lot of traditional financial institutions don't lend to SMEs is because, the default rate is high. Okay, but if I'm handing you a customer that has paid back 17 loans, that is a customer that pays well, right? If they don't pay you back, there's something wrong with your service, but that is a good customer. And so if they start to sort of be on the other end and collaborate more with fintech, I think that that's one of the challenges in these more underserved markets, is that there's still this gap between traditional financial institutions and fintech, and they still haven't really integrated. I think some markets like Colombia are managing better at these issues, but I think that that's a really core element that needs to be addressed. I cannot speak for sub-Saharan Africa, to be totally honest. I have very limited experience there, but that's something that I can translate from my experience here in Latin America, which I could assume might be similar over there.
Dami, Jonathan, anything you want to add there?
Yeah, just I mean, to be honest, it's a very similar experience that we face in sub-Saharan Africa, right? The traditional lenders just stay away from micro and small businesses. But the thing is, like with fintechs like us, right? We've built credit underwriting engines, and we've built tech that enables us to appraise a small business better, to be frank, than a traditional lender. So if we can collaborate, that would be key. You know, as Alejandro pointed out, they have the cash. We don't have the cash to fund, everybody, but we've built the processes and the technology to be able to, point out a good borrower. As Alejandro also pointed out, we've had borrowers that have completed 10, 15 loan cycles with us, right? So so if we could just collaborate better, with the traditional lenders, or find other ways to just access low cost of funds, that would definitely go a long way there.
Okay, great. I just wanted also to pick another question that we have here from Adisu on the financial literacy and on the general public. And this is something that we also see a lot in emerging markets, even both to MSMEs or to the general public, and this like influx of financial products, and then people getting access to credit for the first time and then not using the credits and the financing appropriate. So yeah, I'm just curious if any of you like see a role to play in this, or is it this something that like MSMEs need to take care of themselves, just making sure they use the right product for the right things? Yeah.
Yeah, I mean, I think I'd go back to basics, right? I think it's a lot of the things we mentioned before is being close to that customer, is realizing, and this is something that we as a company have sort of in our mantra, is using sort of the things that typically would be viewed as a disadvantage and try and flip them around and see how we can make them an advantage. When we were raising money in our first initial round, it was always the challenge of, guys, you have a great platform, you have a great product, you have a great founding team, but you're in El Salvador. Who's gonna? The TAM is too small. We're not interested. And I think that similarly, I think that some of those biases exist when it comes to financing. If you're talking about people with disabilities, if you're talking about women or refugees, when in many cases I can think of different examples of platforms that have had great success financing some of these groups, and because a lot of times when you get past the bias and focus in on the end customer, you realize that some of these attributes actually make them a better payer. I mean, we've noticed it in Abaco. On average, female run businesses pay back their loans better. And then this, there's plenty of literature around this, but we've also lived it ourselves, so we cannot ignore it. And so that goes into our decision engine. There's some extra points there, and it's not a bias that we have. It's simply we're running a business here, and it's a sound business decision. I think in the same way that it's a sound business decision to attack the issues of climate change and climate resilience, it's just a good business decision. And so I think that if we're able to creatively look at some of these groups and identify what parts of what make these groups unique actually make them a better customer, if we give them the right tools or the right solution, then that's really powerful. And I think that's ultimately what it is to be an entrepreneur, really. So I think maybe the answer to the question is that we need more entrepreneurs, and we need more capital to support them. Like it seems might be tooting my own horn here, but I think that really is kind of what it boils down to. Because if you're going to wait for the big large capital to sort of go and say, okay, let's resolve the issue of the refugee populations and how to finance them, it's never going to happen. Now, you look at some solutions in South America focused on the Venezuelan diaspora. Huge success. And so that's those, whether you call them displaced or refugees, depending on the definition, but ultimately that is a solution that no bank would have pursued. And yet now there's plenty of banks funding those types of startups because they've seen that it's a lucrative business model. They don't want to go there directly, but they can go there indirectly. And I think that we need more of that ultimately. I think we need a more robust ecosystem with more players that are educated around the potential of these solutions. And I think that that's some of the great work the Shell Foundation is doing. And I think that's some of the great stuff that you guys are doing at Mercy Corps, is really bringing to light some of these solutions and where there is truly opportunity. Because I think the world is full of solutions. What we need is to hone in on where are the real opportunities. And so that will attract capital, because solutions, I don't know if solutions attract capital. I think opportunities do.
That's great. Yeah, as I anticipated, time is wrapping up, and I'll hand it over all to you for some final remarks, but just wanted also to pick a final question. And Jonathan, I'm interested in your perspective as Shell Foundation's sole objective, as you were saying, it's the energy transition while increasing income in a commercial way. Can you speak a bit more about this energy transition, both at the macro and at the micro level, of what we're seeing and what we're seeing in different countries? Because I think one of the specific questions in the chat, it's how are particular countries seeing this transition and openness towards allowing alternative sources of energy to emerge? So yeah, curious on your perspective, and how do you see that energy transition in emerging markets?
Well, I think I would riff off what Alejandro concluded with, right? That capital follows opportunities, not solutions, right? People are somewhat the same. They'll pursue an opportunity. They'll pursue something which has opportunity in it, or risk reduction, and which is and is in their economic interest. So, I was also thinking about something that Dami was talking about earlier, and that Bill Gates has talked about, that the transition will happen when the price point of the energy transition makes sense, whether it makes sense for the company or for the individual. So we certainly have seen that in where he's sitting in Nigeria, right? As fuel subsidies have pulled back, the transition to the green energy sources goes up, and we've seen the companies that we support suddenly move into the black, right, from the red. Similarly, in Kenya, when I can't tell you how many companies I've looked at where their waterfall of their profitability hinges on whether tariffs are lifted or not lifted on imports of solar panels, for example, right? So if the cost becomes affordable, then all of a sudden the green energy, the transition happens at multiple levels, whether it's the cost of the panel or a cost of capital. Right, so it's a bit reductionist, but you could say that each of those comes down to the fundamental economics. The gender question, for gender as well. Whenever I think every one of our gender, we have a commitment to enable as many women as men to achieve that transition of raising income while lowering emissions, and in fact, that's proved to be an incredibly tough objective. Not because it's bad for the businesses. That's the case. In fact, it has to be made. It's good. It's good for almost every, for almost every business we've engaged with to serve women customers. They're just not served, mostly because they're either don't have sufficient voice and agency to go get that product, or because they're a new customer, right? And so they're not. They tend to be less visible to the perspective, to the business that's working on them prospectively. I mean, I'm pleased to hear that Alejandro now puts points into his algorithm in favor of lending to women. It makes sense from all the data I've seen. But it's the same, in all parts of the challenge. There's this fundamental notion that if you demonstrate that this is in the economic interest of the customer or the company or the financier, then the money starts to flow. And so that's a lot of what we seek to do at the foundation. I would encourage others who have capital in the system to look it through the same lens.
Yeah, and I think we are wrapping up of time, so just wanted to give the floor to you, each one of you, with any final messages, reflections, or call to action on this topic of financing MSMEs and building their resilience against climate shocks. Each one will have 1 minute roughly.
Okay.
I'll give mine away. I just had my minute.
It's okay. You're gonna.
Okay. Yeah. So I could go. I could go now. Okay. I mean, less than 1% of global climate startup capital goes to startups from Africa. Obviously that is not much at all, right? So at the same time, we're starting to see a lot of, very innovative climate startups coming up, right? If we can allocate a bit more capital to these African climate startups, then we're going to see more and more solutions that solve the challenges that we've been speaking about. So I think capital allocation to the Africa region is a very, very big issue that needs to be addressed.
Ale, go ahead. We're not listening to you, Ale. I don't know what happened.
You're on mute.
Sorry, I was on mute.
Yeah.
It's just as well because I was really jumping in at the end there. So I think that I totally agree with what Dami is saying, and I think that we've shared some really valid points. For me, it's I don't like coming back to the issue of money, but ultimately I think that a lot of our conversation is hinged around that access to capital, and I think that that's a universal issue. And I think both for MSMEs, in order to have higher resilience to shocks, as well as to pursue additional opportunities to grow their business and therefore be more resilient, but also for startups, right? As Dami mentions, I think that the more capital that flows towards these opportunities, and they are truly opportunities. We have the thesis over here that I think that there will be increasingly more and more unicorns, more and more outsized returns for investors in emerging markets. And also in impact, because ultimately the world is moving in that direction. I think the world is moving in a direction of increased conscience around climate change, increased conscience around financial inclusion, and where there is more conscience, where there's more attention, there is more capital. Where there's more capital, there is going to be more returns. And so I think that we are kind of at that convergence point. And I think that having spaces like this, ultimately, I think I'll use my last seconds to like this is really powerful. I think it allows entrepreneurs from across the globe to connect. I've learned a couple of things from Dami that I'm going to chat with my team about and see how we can do some of that over here. And I think what Jonathan has brought to the table is equally valuable. And so I think that these spaces where we increase conscience around the topics which we're dealing with, and also increased conscience around the opportunity that we're tackling, and the impact that we're having, are invaluable. And I think that I would invite anyone listening to pursue giving space to these kinds of conversations wherever they are.
Awesome. Jonathan, anything else you want to add?
If I have just a moment to finish, then I'll finish on dignity, on human dignity.
Yes, of course. Go ahead.
Yeah. So Alejandro had a moment of shyness in talking about money, though I know it won't last. We shouldn't, because I think both the things we're talking about, whether it's giving people, empowering people with income, or enabling them to live on a planet that's sustainable for them, these are deeply imbued with human dignity. This is what imbues people. This helps imbue people with human dignity. It's recognizing them as an actor with agency to change their lives and the life of the people around them. And I think the work that Dami is doing, that Alejandro is doing, and I know that Natalie, you're doing at Mercy Corps Ventures, does exactly that. So as long as we're traveling in that community, we're in the right company.
Yeah, no, I just want to share that it's been so exciting to share this conversation with you. I've been just taking notes all the time and full of ideas with everything that you've shared. And yeah, just wanted to bring back a couple of the things that resonated with me. I think we started all saying and agreeing that SMEs are a backbone of the economy, and that we really need to understand them and listen to them to provide the right products for them. And that indeed like there are a bunch of solutions such as PayHippo and Abaco who are creating these solutions on the ground that provide a solution for specific challenges these SMEs face towards accessing financing or for the energy transition. And I think like, yeah, we all talked about on the capital allocation, either to these underserved customers or these underserved startups or these underserved countries that indeed have all these solutions. And I think like bringing it back up, like indeed to reach this impact at scale, we need to foster like this additional collaboration, conversation, and partnerships of like-minded organizations that at the end, we want to build a better future for all, as Jonathan was saying, where everyone has dignity and can live a fulfilled life. So yeah, really excited to continue to work together towards this objective that we all share. And thank you so much for sharing your experiences with us. And thank you everyone in the audience for listening and for asking your questions. And I encourage you to follow the Center of Financial Inclusion and each of the organization's social media in LinkedIn, PayHippo, Abaco, and Shell Foundation to get up, and Mercy Corps Ventures, of course, to get up with the work we're all doing. Thank you.
Thank you. Bye.
Yeah, thanks, bye.